Happy birthday, WinPE.
Happy birthday.
Happy birthday.
A very happy first birthday.
Congratulations.
Congratulations.
Happy first year anniversary.
Happy birthday. Happy birthday, WinPE.
Congratulations.
Happy birthday, WinPE. Fantastic work.
Happy birthday.
Happy birthday.
A very happy first birthday.
Happy and proud.
Happy birthday.
Happy birthday.
Happy birthday.
Good morning and good evening, ladies and gentlemen, and a warm welcome. I'm Rochelle D'Souza, and I'm a principal at Lighthouse, a mid-market private equity fund that has been investing in India for almost 2 decades. I've been a part of WinPE since its early days and proudly continue to be involved in delivering its mission. It is no secret that financial services and alternate investment firms have historically not been diverse. For research, women make up a mere 18% of all PEVC employees and an even lower 10% of senior roles globally. Something to think about. Only 15% of senior investment teams are gender balanced, and nearly 70% are all male. Even though gender balanced teams have been shown to deliver a 20% higher net IRR than the median. Let's get to the portfolio companies. Per the same research, gender balanced leadership teams at portfolio companies can deliver up to 25% higher valuation increases. Yet only 7% of PEVC funding has gone to female-led enterprises. And only 20% portfolio companies have gender balanced leadership teams. This gender imbalance in portfolio is correlated to gender imbalance in investing teams. WinPE was launched a year ago to enhance gender diversity in the investing ecosystem, welcomed by the PEVC community, eager to resolve its diversity challenges, and by the women in this industry who are excited to have a platform of their own. It has been a whirlwind year of meetings, COVID, debates, passionate action. And today, I'm delighted to be presenting to you the Alicorn Leadership Summit to celebrate WinPE's 1-year anniversary. The Alicorn Leadership Summit is all about celebrating the power of gender diversity. Our first session in December featured 4 powerful women who have built unicorns. Our second session in January welcomed a panel of LPs and GPs, picking up a conversation we started a year ago on the importance of and the challenges surrounding gender diversity in the investing ecosystem. Now, if you missed those sessions, the video recordings are available on the WinPE YouTube channel. Today, we are thrilled to bring to you global leaders and investors to share the big picture on diversity, the tailwinds pushing the agenda forward, and the underlying business and market imperatives. The session is being live streamed on Facebook, YouTube, LinkedIn, via StreamYard. You can send in your live likes, comments, questions throughout the course of the session, and we invite your friends and colleagues to the same as well. Now let's move on. I welcome Nupur, the founder of WinPE, to take us through this year-long journey. Nupur is a leading investor in private equity and venture capital and an expert advisor to large institutional investors. She serves as an independent director on the investment committees of NIIF, FSFS managed by SIDBI, and DDGF investment funds mandate, and as the independent director on several boards. Nupur has received several recognitions for her work, including being listed among Forbes India W Power Self-Made Women in 2020 and among India's top 100 women in finance in 2019. The list just goes on. Welcome, Nupur.
Thank you, Rochelle. Good morning, good afternoon, and good evening. It gives me great pleasure to welcome you today as we celebrate 1 year of WinPE, a year of working towards a gender-balanced investing ecosystem, a year of empowering women. WinP launched a year ago with a keen orientation on action and outcomes. Our work starts where research and seminars end, at the point where positive intent needs to convert into tangible action. We are extremely proud of what we have managed to achieve in what was a very difficult year. Faced with the lockdown within a month of our launch, we went back to the drawing board to reimagine our initiatives in the new world. And with the passionate support from our partners, we have forged ahead in delivering more than what was initially planned. WinP's engagement rests on three pillars. First, engage with the industry to bring about a long-term, sustainable transformation in the workplace and environment in the favor of gender diversity. In the last 12 months, our partners have collectively made tremendous progress on a number of fronts. Our partners have committed to, first, a two-step process to improve diversity in hiring that emphasizes a diverse candidate pipeline, followed by blind screening hiring processes to eliminate unconscious and conscious biases. Staying away from quotas, this approach underlines our belief in meritocracy. Second, measure and track metrics on women in key roles within their firms and in the companies that they have invested in. Measurement and tracking is the first step to shining the spotlight on the importance of this topic. Third, support mid-career women professionals by nominating them for mentorship and leadership development training opportunities. More on this when we talk about the initiatives that WinP is running. Fourth, kickstart the conversation on gender diversity with investee companies, leveraging the multiplier effect of the private equity and venture capital industry to bring up important issues like pay parity and gender-balanced leadership teams. The second and third pillars focus on working with women who are a part of the industry and those who aspire to be. Through resources like one-on-one mentoring, leadership insights, workshops on leadership skills, career conversations, technical sessions, networking, and more, our resources for women are free, and all women are welcome to leverage them. Our action-oriented approach, with an emphasis on creating value for all stakeholders, has found strong resonance with the industry. With leading global and regional firms as our partners, WinP has delivered a power-packed 12 months. We have organized 18 events, bringing 69 industry leaders to our constituents in high-quality and candid conversations. With this all-rounded approach of working with the investing ecosystem at all levels, WinP has rapidly established credibility as the go-to platform for thought leadership and action on gender diversity in private equity and venture capital. We are very proud of the demographic profile of our audience. Our engagement with men and women is well balanced at a 60-40 ratio in alignment with our objective of bringing both genders into the diversity conversation. We are thrilled to see the deep engagement with our platform at the mid to senior level, leading the way for long-term change. This is just the beginning. As we walk into another year, we are excited to share a sneak peek into some of the things that we have lined up. All of this would not be possible without the passion and commitment from each one of our partners who believe deeply in WinP's vision and mission and are leading from the front. During the session today, we will be sharing snippets from case studies from our partner firms, showcasing some good practices and examples of changes made successfully. These case studies will be available on the WINPI website for the ecosystem to leverage. I'm grateful to our advisors, Ms. Anita George, Ms. Renuka Ramnath, and Ms. Zia Modi for being the guiding light to WINPI and keeping us on our toes. They are an integral part of WINPI's thinking and will be sharing their wisdom with all of us today. I am privileged to have the support from each of our guest speakers who are taking the time to share their experience and insights. Your presence here sends the signal quite clearly that gender diversity is a priority. We all want a sky sans ceilings. Over to you, Rochelle.
Thank you, Nupur. Now moving on to the next session. Our keynote address is by Ms. Stephanie Von Friederberg. Stephanie is the IFC's Interim Managing Director and Executive Vice President. She leads the implementation of IFC's strategy to create projects and attract private investment in developing countries while increasing opportunities for women, scaling up investments to fight climate change, and promoting digital development. She is also IFC's Chief Operating Officer and leads all investment operations and advisory services, managing 59 billion debt and equity portfolio in more than 100 countries. Ms. Stephanie began her World Bank Group career almost 3 decades ago and developed strong expertise in Africa and Central and Eastern Europe and in sectors such as telecom, manufacturing, and a wide array of technologies. Welcome, Stephanie. At the end of her note, Stephanie will be joined by Ms. Anita George for a Q&A session. Anita, who has been a member of the advisory board of WINPE, is the Executive Vice President and Deputy Head of CDPQ Global. She fills a key role in developing CDPQ's activities in its 3 priority international areas: United States, Latin America, Europe, and Asia Pacific. She actively participates in positioning CDPQ internationally, as well as developing and executing its globalization strategies. In addition to her role managing the international offices, Ms. George contributes to diversifying the portfolio by taking a holistic view in approaching the various markets. She sits on CDPQ's Investment Risk Committee. Her various roles have led her to work in several regions of the world, including Europe, Asia, Middle East, Africa, and Latin America. Over to you, Stephanie.
Rochelle, thank you very much. Good morning, good afternoon, and good evening to everyone joining from so many different time zones. Thank you, Anita and team, for the opportunity to speak with you. It's a pleasure to be here, especially now, given that the pandemic has exacerbated economic gaps between men and women and threatens decades of progress toward gender equality, a topic that is critical for IFC and for our development mandate. Let me first set the scene for you. Even before the pandemic hit, developing countries were losing nearly $48 trillion in wealth because of lifetime earnings differences between men and women. Gender gaps persisted in private equity and the venture capital ecosystem. Globally, just 1 in every 5 alternative asset professionals is a female, leaving women-led enterprises with less than 3% of the global venture capital. And while in emerging markets, women account for 11% of all senior investment professionals, in the VC and PE ecosystem in South Asia, they account for only 7%. And at the country level too, India's gender gaps have been widening. Despite robust economic growth, India's female labor force participation has dropped from 34% in 1999 to 21% in 2019, a significant cause for concern, with only 1 out of every 5 women in the workforce. Layer onto this the COVID pandemic, where early research shows that women's jobs are now 1.8 times more vulnerable than those of men. Although women make up 39% of global employment, this translates into women shouldering 54% of all job losses. One reason for this clearly is the increasing responsibility for family care, which is largely carried by women. In India, early estimates show that the COVID pandemic has increased the time women spend on family responsibilities by nearly 30%. We are also seeing that for women, the shift to working from home is more challenging, especially across low and middle income countries, where 300 million fewer women than men use mobile internet. These barriers are reducing women's ability to work remotely or access digital markets. The digital gender gap is the widest in South Asia, where women are 23% less likely to own a mobile phone than men and 51% less likely to use mobile internet. And yet, on the upside, McKinsey data suggests that acting now to advance gender equality could be incredibly valuable, adding $13 trillion to the global GDP by 2030. So gender equality is not a social issue. It's an economic growth imperative, and it is central to our recovery strategy. At IFC, we believe there has never been a more opportune time to invest with a gender focus, and we are leading the way through a three-pronged strategy. First, we are pioneering research to gain true insights into gender investing, both in terms of building a business case and in addressing related challenges. Second, we are partnering with others to get it right. This is not a space where institutions can and should be working alone. And third, we are putting our money where our research is. Let me expand on the focus of our research. In 2019, we partnered with Rock Creek to publish a report on gender representation in the private equity industry in emerging markets. Simply put, the research demonstrated that gender diversity leads to better performing private equity and venture capital funds. In fact, we found that private equity and venture capital funds with gender balanced senior investment teams generated 10 to 20% higher returns compared with funds that have majority of male or female leaders. We also found a correlation between the number of women on investment committees and the amount invested in women-owned or women-led portfolio companies. This was the first research of its kind, examining over 700 funds and 8,000 portfolio companies in emerging markets. Then, to take this research into action, we published a gender lens investing guide together with CDC Group to advise our partners on how to consider gender throughout the investment cycle. This practical step-by-step guide focuses on how funds can become more diverse in their own workplace, particularly investment committees, and on how they can apply a gender lens in investing in and managing their portfolio companies. This type of research is key to successfully mobilizing our clients to integrate gender into their capital allocation process. But as you can see, it requires partnering with others, the second leg of our strategy. No one can move the needle alone. What yields the greatest results for IFC and for every organization and company is collective action. We all need to do more, and we all need to learn from each other, inspire, challenge, and push each other. So we are joining forces to co-develop ideas, build the business case for investing with a gender focus, and providing tangible recommendations to our clients. For example, to help address online access and usage gaps, IFC launched Digital to Equal in partnership with the European Commission. The 18-month initiative brings together 17 of the world's leading technology companies operating across the online marketplace to boost opportunities for women in emerging markets. Digital to Equal members have worked to expand opportunities for women in two ways. First, making measurable, time-bound, and new commitments specific to each company's goals. I'm proud to say that over 50 individual commitments have already been completed. And second, participating in knowledge exchange sessions to share practical information on how to put commitments into action. Stay tuned. Building on our Digital to Equal, IFC will be launching in May a robust e-commerce research report that highlights barriers and opportunities for women in e-commerce across Africa and Asia. Finally, putting our money where our research is, the third prong of our strategy. On the debt side, we have dedicated financing to women entrepreneurs through our Banking on Women program since 2006, and now have committed a portfolio of over $2.8 billion for women-owned small businesses through over 100 financial institutions. IFC has also been increasingly expanding its financial instruments. We recently invested $75 million in a bond issue of Turkey's Guarantee Bank. This was the first private sector gender bond in emerging markets dedicated to financing enterprises and companies owned or managed by women. Since last year, we've committed over $56 million in advisory and investment interventions globally to address gender gaps in private equity and venture capital financing. IFC has a portfolio of 31 funds in South Asia with almost $500 million committed, including an investment in India Alternatives 2 Fund and Multiples PE Fund 3, both women-led PE funds. We also piloted IFC's gender workshop for fund managers in India to enable them to identify gender opportunities throughout the investment cycle and within their teams and operations. By making IFC resources available and encouraging our investee funds to increase their gender focus, we can demonstrate the benefits of investing in women-led companies and focusing on the women's market. But we need to do more on the financing side, in particular for startup capital. As part of the Women Entrepreneurs Finance Initiative, or WEFI, we are working with the World Bank on a range of partnerships to boost gender lens investing through funds, accelerators, and incubators. Currently, only 11% of seed funding capital in emerging markets goes to companies with a woman on their founding team. Yet female-led startups can receive a significant increase in the amount of debt if they participate through an incubator, as much as 2.5 times more. So let me conclude. Like previous global crises, COVID-19 has been a harsh reminder of the undeniable fact women's economic participation is necessary for a resilient and sustainable recovery. It is up to us to make that happen. The private sector can help close gender gaps at all levels, in leadership, in the workplace, in supply chains, at the customer, and community levels. I hope that today's discussions will encourage all investors in attendance to direct capital towards solutions that drive gender equality and realize better returns. We at IFC stand ready to partner with you to help collectively achieve gender equity and ultimately pave the way for a better future for all. Thank you.
Hello, Stephanie.
Hello, Anita. It's lovely to see you. You look fabulous.
Likewise, and thank you so much for agreeing to be with us today. It's really an honor and a pleasure for all of us at WinPE. And I'm very proud to say today WinPE completes its 1-year birthday. And it's very fitting that we should have a woman leader like Stephanie von Friedberg with us today. So let me kickstart our session. I'm just going to ask you some questions, Stephanie. The first one is, you mentioned a lot of statistics on women, which I think by now should be common knowledge, but worth repeating again and again. You also mentioned a lot of actions that are being taken by development institutions like IFC that work with the private sector, which is very, very encouraging. If you had the power to change one thing in favor of gender balance, what would that be?
So Anita, it's not going to surprise you that my answer says technology. If I could wish one thing, I would wish that we could create ubiquitous, affordable, reliable broadband internet for all with affordable devices And together with that, gender unbiased AI and algorithms, so that as we build the digital economy for the future, we create an economy that's gender blind.
Thank you. And just for information, I would like to share that Stephanie was a key player in the telecom business of IFC and really made many transformational investments throughout several regions in the world. So I'm not surprised by your answer, Stephanie. One of the things that you also mentioned is about women-led businesses. And I know that IFC has been doing a lot to encourage women entrepreneurs across the world. So the question that I have is, do you see global trends, patterns, and how do you think we can enhance and accelerate these trends in a very practical and
It's a great question, Anita. And sadly, I think because of the COVID crisis, we've lost significant ground. I read a UN Women report the other day that said when the COVID crisis is over, we may lose as much as 25 years of gains in terms of gender equality. And I think that largely has to do with women taking on more responsibility at the home relative to men. So I would say that in addition to continuing to provide access to finance for women, where there still remains a massive gap. I think in India, it's about $158 billion a year alone. We need to also focus on two other areas. First, we need to increase the amount of childcare that we make available for women. And we have first done some research, published a really interesting study. And I have to say, when the teams first said we're doing a study on childcare, I didn't fully connect why it was important. And yet when we finished our research, it really does demonstrate that we need to push all of our clients to help create opportunity and access to childcare for women. And then secondly, we need to think more holistically about not just funding women-owned companies, but helping them grow and grow beyond a one-person shop. The majority of, for example, in India, the majority of women-led companies are either informal or have only one employee, the woman herself. And what we really need to do is figure out how we take those and scale those companies. So they need access to financial planning, they need access to accounting skills, they need access to insurance. And one of the underlying kind of suppositions of WeFi was really, how do we grow that set of portfolio kind of advisory services that we can give to women? And I think that's where we really need to begin to focus to make more holistic interventions.
Thank you, Stephanie. One other question I have is that IFC has been a leader and I would say a pathbreaker in terms of putting development at the heart of investments and working with the private sector. Can you tell us a little bit more about IFC's efforts in bringing other investors towards this common goal of gender balance?
So Anita, we make mobilization. So, we have two key pillars of our strategy. One is to begin to create projects where they don't exist in the world's poorest country. And the second is to figure out how to bring more and more investors with us as we venture to different markets around the world. And we've gotten to a point where we mobilize $1 for every dollar we invest. And our intention is to try to grow that higher than $1. We know from experience that there are pension funds, there are sovereign wealth funds who are sitting on the sidelines looking for yield, and there is no yield in the developed world. So the question really for us is, how can we create platforms and vehicles that will allow them to meet their regulatory obligations in the countries in which they're domiciled, while increasing their yield by coming with us into some of our markets? So we have our MCPP platform, where we have brought many insurance companies into our infrastructure and manufacturing and services, as well now into our financial institutions portfolio. And many of our mobilizations in financial institutions really are women-owned and women-led financing through financial intermediaries. So big piece of our business now is really focused on that. And then the second is the asset management company, where we bring outside investors into our equity positions via the asset management company.
Excellent, thank you. And one argument, Stephanie, that we often hear, and especially when we are trying to promote things that are not yet business as usual, is that there is a trade-off between adopting some of these measures which encourage gender diversity or ESG, and that it actually the trade-off is vis-a-vis commercial or financial. What is your view and IFC's experience?
So Anita, we've been doing this since inception, and I think over our almost 70 years of existence, we have proven that you can do well and you can do good at the same time. And I fundamentally believe that there is not necessarily a trade-off. So ESG has been at the core of our work forever, and we've really been able to take our performance standards and bring them to the market via the Equator Principles and working with the Equator banks. That was really the start. But then we said to ourselves, everybody's talking about impact investing, and what do they really mean? And so many different people were launching impact funds, and it was becoming impact washing, just like we had seen greenwashing with green bonds. So we created something called the Impact Principles, and we now have over 100 signatories and some of the biggest investors in the world as signatories to the Impact Principles. And it's really a beginning, Anita, because we understand it's a complex set of issues that people are trying to tackle, and different investors have different ideas about how they want to have impact. So the initial frame is to say the following, that when you make an investment, you make that investment with intent. So many investors were making investments and then backward looking and saying, okay, this has impact, therefore it comes into our impact fund. We actually say, make the decision that you're going to have impact up front. Second, tell the world how you're going to measure that impact. Third, get an external auditor to verify that measurement and that you're actually getting what you said you were going to get. And finally, exit with return. And now that we've done that and people are beginning to follow that pattern, we've started to go into different verticals to say, how would we measure impact vis-a-vis gender? And would everyone agree to that? Could we set standards for measuring climate? Can we set standards for measuring improvement in childhood education or childhood health? So we'll have to go vertical by vertical in terms of thinking through how we measure each one. But the principles themselves, I think, are a really good start.
Yes, I fully agree with you, Stephanie. And I actually remember during my early days in IFC, when we first started talking about performance standards and ESG standards, it seemed like we were the only ones out there, in the wilderness of investment that talked about these things. But now we see more and more investors coming forward and incorporating either existing performance standards or creating their own standards that they are benchmarked and, as you say, verified and producing sustainability reports, etc.
I think ESG, Anita, is table stakes at this point. And how do we go beyond that, right?
Correct, exactly. And my question is actually linked to that, in that, do you see gender inequality and inclusiveness becoming as mainstreamed as ESG has now become?
I think it's getting there. And interestingly, I think COVID has really laid bare a couple of things. First, inequality, and we've seen it across the spectrum of gender, access. Access to education is a perfect example. I mean, I talked a little bit about, access to digital platforms, but Anita, today there are 450 million children who aren't in school because they don't have access to the internet. Half of them are girls, and we know that most of them won't go back. We could lose an entire generation of young women who don't get an education. So I think these kinds of things are going to come out. For me, the question will become, how do we balance all of the priorities coming out of the COVID crisis in terms of everybody saying we need to build back better, we need to build back more resiliently, the substantive push for climate, and how does gender fall in that equation, and how do we make sure that it stays at the forefront? We've really done that through the commitments we made as part of our capital increase, where we committed to our shareholders kind of three things: do 40% of our business in the world's poorest countries, increase our gender lending, and increase our climate lending. So we leave those three KPIs as kind of the fundamental pillars of what we're measuring and striving for. And I'm hoping that other institutions will do the same so that we can bring and leave gender at an equivalent importance in relation to how we build back better.
Yes, absolutely true. And then my last question is really one to ask. While I know that IFC and a lot of the other DFIs have done a lot in terms of, supporting female fund managers, the gender lens investing, the 2X challenge, gender smart investing. One question I have is, where do you see the DFIs? Can they do more? And I include IFC as well as other long-term investors on converting some of what we are talking about on gender diversity and inclusion to actual action.
So Anita, we can do more and we must do more. And we are actually, so the 2X challenge was a really interesting challenge that the bilateral DFIs created. And we are now in the process of getting together through the constellation of the new G20 to ask ourselves, how can we set harder targets for the gender investing and trying to continue to push the envelope. I think the other thing that all DFIs can do is look to our own backyards. So, in IFC, we've done well at the very senior levels at creating gender balance. But if you look deeper into the organization, we're still not at gender parity in all of our grade levels. How do we get there? And we are setting some hiring targets to try to push ourselves to gender equality at all levels in the institution. And the other thing we've done, which I would love to see other DFIs do, is that we set a goal that by 2023, half of all of our board seats would be filled by women. And when we set that goal, we were at, 28%-ish. And the number of managers who said to me, Stephanie, this just can't be done. And yet we're already at 42% and well on our way to 50%. And I would love to see some of the other financial institutions make some commitments like that, because again, that just indicates that both in our business, but as well as in how we're running our institution, we're thinking at both levels.
Thank you so much, Stephanie. It's really great to hear, and I think we can do a lot leading from your example. Over to you, Rochelle.
Thank you, Stephanie, for this wonderful session. Gender focus is no longer a social issue. It's an economic imperative. And thank you for summarizing that so beautifully. And it's quite encouraging to hear 42%. And I'm waiting when we can get to that 50% mark with women boards. Thank you so much, Stephanie. Anita, you've been a close champion of WinPE from day one. Given your experience globally, would welcome you to share your perspectives on gender diversity. But before you get there, I want to ask you one question, which you asked Stephanie, which is, if you had the power to change one aspect in favor of gender diversity, what would that be?
I think it shouldn't be just a nice to have, but a must have for all investors and all companies. And that's my dream. Really, it should be something which is so well accepted, commonplace, that it's really not a topic we have to talk about.
Thank you, Anita. Over to you.
Thank you. So, we all heard from Stephanie amazing numbers. And what was kind of alarming to me was the numbers in Asia really need a lot of improvement. So WinPE and what we are trying to do in WinPE, and for all of the GPs and VCs in the audience, I would hope that you hear these numbers which demonstrate clearly and without a doubt that having more diversity and inclusion is really something which supports economic performance as much as it diversifies your workforce and your sources of capital. At CDPQ, and let me just give a 1-minute explanation, CDPQ is Canada's second largest pension fund manager. We have about $250 billion under management. And we have made diversity and inclusion a part of our daily work. We have brought together, not just by our own example, but also a group of investors who collectively manage $5 trillion called the Investor Leadership Network, where we are focusing very closely on improving diversity and inclusion. And as Stephanie said, we are putting where our money where our mouth is. So concrete actions taken so far. We recently adopted a new diversity and inclusion provision in our policy governing the exercise of voting rights of public companies. This encourages and promotes diversity and allows a range of opinions to be integrated into decision-making in these companies. We require a target of 30% of women on board of directors starting in 2022. And if the level is not reached, we will have the option to vote against the directors in charge of nomination. And we are increasingly aware that our collective influence as long-term investors can really start to shift and move the needle. One important aspect that I want to stress on is having the right data and being open to disclosing data. Because once we know where we stand, then we can start taking action. The Canadian Investor Statement on Diversity and Inclusion by the Responsible Investment Association in October 2020, together we took a view that we will disclose diversity data, adopt policies, targets, and timelines, and make them public, and expand the organizational efforts to address barriers. So what are we talking about here? Several programs on mentorship, both internally for our own women employees, as well as externally for women in our investee companies, women in the communities where we are based. And this has had a big impact. Almost 2,500 women at CDPQ have gone through these mentorship and leadership programs. We have more than 70 companies owned by women who have benefited from these programs. So we very strongly believe that we have to be the change that we want to see. Not only that, but we have to lead the change, bringing in other investors. And as we heard from Stephanie, partnership is very, very critical and important. And to conclude, I would say that CDPQ recently, we created an equity fund called 25 to the power of 3, and you'll hear later in our case studies that we are presenting about it. So I won't say too much more, except that as the title suggests, this is accessible by companies who have 25% of management, board, and shareholders from diverse backgrounds, including gender. And the most important thing that I wanted to leave as a message, that LPs are moving to ensure that diversity and inclusion is not just a nice to have, it is a must have. And so to the PE and VC world, I would say it is good economic sense to put diversity front and center. And I hope you will join us all in celebrating 1 year of women in private equity and VC. And we hope to see action at all of the firms who are our members and the ecosystem. Thank you very much.
Thank you, Anita. Anita spoke about some of the initiatives taken by CDPQ that have yielded tangible outcomes in advancing gender balance. It's no longer about the nice to have, right? It is a must have. WinPE is excited to bring forward some of these good practices from different institutions as an example for the rest of us to follow suit. Here celebrating their journey in the path of gender diversity. I hope you have your beverages ready because you are in for an exciting conversation with Ken Melman, partner, Global Head of Public Affairs, and co-head of Global Impact at KKR, leading KKR's responsible investment efforts. Ken Melman has spent a quarter century working at the highest levels of public policy, business, philanthropy, and social change. Ken spent 12 years in US national politics and government service, including as the 62nd chairman of the Republican National Committee and a campaign manager of President Bush's 2004 re-election campaign, the only Republican presidential campaign in 30 years to win the popular vote. Ken graduated with a BA from Franklin and Marshall College and holds a JD from Harvard Law School. He's a trustee of Mount Sinai Hospital of New York, Franklin and Marshall College, Teach for America, and sponsors of Educational Opportunity. Mr. Melman was active in the successful effort for marriage equality and is a member of the Council for Foreign Relations. Chatting with Ken will be Haslinda Amin, Chief International Correspondent for Southeast Asia and an anchor for Bloomberg Television. She is also the host and the executive producer of talk show High Flyers, which is the longest running program of Bloomberg TV. Based in Singapore, Amin has been at the heart of making news stories that have driven the region's transformation. She has helmed Bloomberg's coverage of the Asia-Pacific Economic Cooperation Meeting, the World Economic Forum, the AIIB Bank Board of Governors meeting, the ASEAN Milken Global Summit. Amin has interviewed a wide range of top political and financial figures that include Paul Walker, Joe Biden, Mike Pompeo, Timothy Geithner, Stanley Fischer, the list just goes on. This was just a small subset of her repertoire of all those amazing interviews. She serves on the board of UN Women Singapore and has been nominated numerous times for Best Current Affairs Anchor at the Asian TV Awards. Over to you, Haslinda.
Rochelle, thank you so much for those kind words. Now, we've heard a lot about how the pandemic has given us an opportunity to build back better. We heard from Stephanie earlier, we've heard from the Biden administration, and it was a main theme at the virtual World Economic Forum recently. It's about mobilizing capital into investments that are not just profitable, but also generate positive, sustainable outcomes for societies. And we've heard how Ken has been at the heart of impact investing. And Ken, before we get into investing through the gender lens, we know that KKR has over the past decade put ESG impact front and center in its investments across regions, Asia, Europe, the US. Give us a sense of how much headway we've made in terms of impact ESG investing over the last 12 months amid COVID-19.
Well, first of all, thanks for the question, and I really appreciate being included. I was enjoying listening to the previous speaker, and I want to open by saluting the amazing work that the IFC has done. we are among the signatories to their impact principles, and we have found working with them, learning from them, and learning from others who are part of the impact community that they've built tremendously helpful as we build out our effort. So when I think about the last year, one of the things that really sticks in my mind is there was a video that everyone was watching about a year ago, and it was from Bill Gates, and it was from 2016. And if you remember, what Bill Gates talked about was the one thing that could truly disrupt our society in an unprecedented way was a pandemic. He warned us. And we were also warned when we had SARS and MERS and Ebola, but people didn't pay attention enough. And so we found ourselves in this tough situation this year. Think of all the other ways we've been warned. And I think the biggest thing that's going to come out of the last year is the development of what I call a resiliency economy or a preparedness economy. So obviously healthcare is the most obvious example. And you're seeing tremendous investment in companies that are providing diagnostics, that are dealing with antibacterial challenges, and that are improving public health. But climate change is another example. Think of the unprecedented tragedy we saw in Australia and in the Western United States, economic and ecological. And so as impact investors, investing behind climate change is a really important area in which we're focused. And as investors more broadly, because while part of our strategy is impact, we invest in a lot of different areas. We believe that we can enhance ESG, in that case, the E of the ESG, by helping all of our companies reduce their environmental footprint, reduce the energy that they use, reduce the carbon that they emit, reduce the amount of forest products that they use. So I think what you're going to see at the end of this year, both with impact and with ESG, is you're going to see people appreciate, first, there are tremendous commercial opportunities to build industries that address the need to mitigate and adapt to climate change, that make sure that we have a workforce that's well equipped, that deal with the gender disparities in our society. And there's going to be a need for every company, no matter what you do, no matter what you sell, to improve your diversity, equity, and inclusion, to be responsible when it comes to climate change, and to make sure you're governed in a way that is appropriate. All of those, to me, are what come out of this year.
You said it, Ken. I mean, a multitude of issues that need investment: climate change, clean water, waste management, mobility, infrastructure, education, poverty. Where are we at risk of missing out on real opportunities?
Well, look, I think that the biggest thing that, to me, we need to think about is what's changing in terms of how consumers are thinking. So let me give you an example. One area that's very interesting to us and that we're very focused is what we call sustainable living. And that is everything we do every day is going to be considered through a sustainability lens. We bought a really interesting company in Italy that uses essentially technology to reduce the size of packages that your Amazon and other products come in. There's a 40% reduction in forest product inputs into their packaging. So less paper, more trees are preserved. Obviously incredibly important both economically, but also from an environmental perspective. And I think more and more individuals are going to say to the Amazons of the world or the FedExes of the world or anyone else that ships their products, tell us what your strategy is when it comes to reducing the amount of environmental impact and input of your packaging. That's one small example of the world we're entering. And I think in area after area, we're going to all say, how do we change our lives to be more environmentally responsible? And as a result, there will be tremendous economic opportunities to invest in companies that are intentionally trying to address those challenges, that were created for the purposes of addressing those challenges.
The thing is, even as we make improvement, the pandemic itself has exaggerated the glaring disparity, unequal access to healthcare, unequal access to vaccines. More women than men have lost their jobs amid the pandemic, which are becoming social risks. How do you invest in a way that support equality, support diversity, bridge the gap between the rich and the poor? What needs to change?
I think it requires, we have a systemic problem when it comes to equity and equality. There are systemic challenges, impediments, and inequities when it comes to women and men, and when it comes in the United States to racial questions. And so what do you do about it? you have to address it by addressing the entire system. What does that involve? First, it starts off with saying we need to make sure that folks are in the room. We've added in the last year 100 diverse board members to the companies that KKR has a controlling interest. The result being that every one of our companies has an average of 3, but at least 2 diverse board members at the board level. You know why that's important? Because it's important that when a company is thinking about its strategy and its policy and its products, it has individuals in the room that represent everybody. Presence makes a huge difference, number one. Number two, we have to deal with the fact that every single one of us has unconscious bias as a result of the world we live in. In the last 3 years, we have systematically added unconscious bias training to something we require for KKR executives. We encourage that for many of our companies too. Number three, we need to look at all of our policies and procedures and say, what can we do to make sure they're operating in a way that is consistent with our goal of equity and equality? We partnered with 2 organizations, one called Business for Social Responsibility, and we're very pleased that an organization called Time's Up helped us training our chief human resource officers, our general counsels, and in developing best practices for our companies. All of those things we can do, but let me tell you something else we can do. We can develop products and services that address the inequality we have. Let me give you an example. We have a company called Burning Glass. Burning Glass is in the labor market data analytics company. Doesn't sound very sexy or exciting, does it? But let me tell you what they do. What they do is they help predict what are going to be the jobs of the future and what are going to be the skills you need in the future. And when they do that, they can help us move from a world where today people get ahead based on credentials, which often can reaffirm existing biases, to a world instead when people get opportunities based on their skills. And so what does that look like? Let me give you an example. If you look today at 2 jobs, one job is a web design job. That is a job where there is about 52% of web designers are women. Mobile app developers, only 9% are women. Mobile app developers make a lot more money than web designers. Once you understand that, what you as a company can do and what Burning Glass helps you as a company do is understand that actually 75% of the skills you need to be a mobile app developer, you understand as a web designer. And if you simply equip employees with a couple other skills, as opposed to saying, I need to find more women who are going to be in job A, you can say job B overlaps with job A. There's tremendous adjacencies. Let's simply provide additional skills to our existing employees. So if you actually look and map out every one of the jobs at every company, and you then say, where are there adjacencies between job A and job B in skills? And where is there a big distinction when it comes to gender equity or racial equity or otherwise? It's very easy to develop a roadmap to upskill your workforce. Folks you know, people you know who do a great job. They share your values. They share your culture. They work hard. And all of a sudden, you're improving your numbers. So I think it's all those things. It's diversity at the hiring level. It's diversity at the board level. It's fighting unconscious bias. It's having the right policies and procedures. And very importantly, it's saying what are services and products we can develop that address this challenge.
Also, in the end, it's measuring success. I mean,
Absolutely.
Mike Bloomberg always says, if you can't measure it, you can't manage it, you can't fix it. We had it from Anita. We had it from Stephanie. How do you measure success in the space of impact investing? How are you doing it?
So we believe that in measuring impact success, it is critical that we use the good work that people have been doing for many years. So we believe very strongly in using existing, established, third-party KPIs. So one, with respect to impact, we measure everything against the United Nations Sustainable Development Goals. We only invest in companies. We've made 11 investments so far. Every one of those 11 investments is in a company whose primary business, their primary revenue, their core business model is addressing a locally relevant United Nations Sustainable Development Goal in a measurable way. So we're measuring A, is it locally relevant? B, can we measure the impact? And C, is it core to what they do as a business? And that's one thing we measure. We also think it's critical not just to measure what a company's intention is, what they do, but how do they operate? And so there we use the SASB standards, the Sustainability Accounting Standard Board standards, which were developed a number of years ago by a great leader named Mary Shapiro, who was head of the Securities and Exchange Commission under President Obama. And the basic thesis was there's a whole bunch of companies out there that data like their climate footprint or their governance, or in our opinion, their gender and overall diversity statistics are actually material and relevant to those companies. And so we're going to go in and we're going to use the SASB standards to identify what are the ESG questions we need to measure and seek improvement of to this company. Final point, for every one of our impact companies, we're also systematically measuring three things. One, we're measuring diversity statistics. Two, we're measuring climate statistics. And three, we're ensuring that if they possess data, that the data is being securely and appropriately from a privacy perspective addressed.
I want to take a look at impact investing through the lens of gender now. How can gender be integrated into mainstream investing? How do you drive best practices forward?
So I think what you do, and I described a few of the strategies that you do earlier. First, you make sure that at the leadership level of companies, at the board level, at the C-suite level, there are women present in numbers that allow individuals to drive the governance of companies. Again, so much of effectiveness in this space is understanding the experience, the lived experience that people have to address. So first is recruitment at the highest level within a company. Second is you need to look at a company's policies and procedures and say, how do we make sure every one of these policies, procedures, very few companies today, I don't think, intend bias, but because bias exists in our society and has existed for so long in our society, many people have policies and procedures that de facto continue bias. So the second question is, how do we create policies and procedures with respect to how we operate that we examine to say, is the unintended effect a bias within how a company promotes, how a company rewards people, how a company considers people's effectiveness, measures all those things. So you need to look at that from the perspective of to say, doesn't matter what you want to do. If what you're doing, if when you look at it and you disaggregate the data, the effect is that men get ahead more than women, that men get paid more than women, if that's the outcome, you need to change it, regardless of what the intention of that is. So the second is a rigorous assessment of the policies and procedures within a company to address the challenge. Third, I mentioned before, unconscious bias. Every single one of us has unconscious bias. Every single one of us has it. We have to systematically work to fight it by training people to understand it and see it and appreciate where it exists. That's extremely important. Four, expanding the aperture of who you hire. Part of that expansion, in my opinion, is to say, as opposed to saying, I want to hire X person because they look like the people we've hired before for a job. I want to understand what are the skills you need for that job. Because if you understand that, you can realize there's a whole nother world of people, a whole nother universe of people you haven't thought about before, and they may actually work at your company already. And I think doing all those things helps begin the process of addressing the challenge we described.
Ken, this question is being asked of all the speakers today. If you had the power to change one thing in favor of gender balance, what would that be?
I think the unconscious bias question is the single most important thing. Look, I thought about that, and I've been watching other speakers, and there's so many things that come to my mind. Obviously, pay parity being critically important, power parity being critically important, but it all comes down to the fundamental question of how do you think about the world? And what we all have to understand is that in many areas, gender is one, race is another one. There have been biases built in to many systems. And we were raised in those systems. Doesn't mean we're bad people, but we were raised in those systems. So the first thing we have to do is understand things that look and we think might be neutral and fair, but that produce an unfair outcome for women or for people of color or historically underrepresented groups are not fair. And so we have to fight those and change those and address those. So I think if you open the world understanding, you and I and everyone in the world enters the world with unconscious biases. By the way, about everything. if your every single day is spent partly saying, how do I figure out what I think I know but isn't true, and figure that out and build that into your life, you're going to not only be a more fair person, you're going to be more productive in all kinds of ways.
You speak of biases. You had to fight it. I mean, you came out as gay back in 2010 when it was quite a challenging time to do that. First, what made you go public at that time? What was it like? Were you surprised by Henry Kravis's response?
Well, look, I would say the folks that are truly brave are not me. There were people that came out in 1985 and 1990. And what I learned most is there's a gentleman who's very famous named Harvey Milk, who's considered the godfather of LGBTQ equality, civil rights leadership. And he said the single most important thing you can do is to come out, because once people know you, it gets to that earlier point I made. Once people know you and they get to have a relationship with you and they see the situation that you face, things change in a massive and powerful way. Henry Kravis is an incredible man and an incredible leader and an incredible friend. And I'll tell you the story because it says so much about him. So I came out to him, and at the time I came out in 2010, I was involved in an effort called AFER, which was an effort to overturn Proposition 8. AFER was the American Federation for Equal Rights, and we had hired Ted Olson, a very prominent Republican lawyer, and David Boyce, a very prominent Democratic lawyer, who had faced off in the famous Supreme Court case, Bush versus Gore, to overturn Prop 8. And we had a fundraiser in New York that I was the host of. And so I said to Henry, I'm coming out to you, and you need to understand this event I'm doing, it's going to be very public, and I'm going to be in the press as well. And Henry said, without missing a beat, Henry said, obviously, love working with you. I'm glad you told me this. That event you're doing, how much do I have to give you to write a check? You fill it in as long as you'll put my name on the invitation. And Henry wasn't the only one. There were 5 members of KKR's management committee who came up to me and asked if they could have their name on the invitation, including Scott Nuttall, who's now the co-president of KKR. And that meant so much to me. Words can't describe it. Because what they were doing wasn't just saying, hey, we're with you. They were putting their name out there as being supportive. And it was an incredibly meaningful thing to me, and it's something I'll never forget.
To that end, Ken, how has your own personal experience shaped how you view investment through a gender lens?
Well, look, I think that I hope what I've learned from my experience, and it isn't just that part of my life, what I was raised to understand is that what decent people do is they look around the room and they think about who is the other. Who is the individual in the room? Who are the people in the room who haven't had the opportunity, who aren't part of the majority, who have had and faced discrimination or have faced unfairness? And how do you help those individuals? And to me, doing that is most importantly important to do because it is the morally right thing to do. Do unto others, this essence of all of our morality, the golden rule. But it's also, and this is what is so important about this fantastic summit, it is consistent with good and smart business. That's the point. If you think about it, who are the people that are the best investors in the world? People that see untapped potential in a company. One of my colleagues who often speaks is a guy named Pete Stavros. Pete is the co-head of our North American business. And Pete has found tremendous opportunity that can be unleashed in manufacturing and industrial companies if every employee in the company has stock in that company. Because all of a sudden, all the ideas of individuals who work with their hands, who work on a shop floor, are being built into how a company operates. Yet for many years, the focus was management getting paid well, not all the workers. Yet if all the workers are aligning in the same direction, that's untapped potential. And I think the question of gender equity is the ultimate example of untapped potential. For so long, so many people who had brilliant ideas, who had incredible work ethics, who had all the heart in the world, weren't allowed to achieve those potentials because of unfairness, because of bias, because somebody kept them down. And if you can figure out how to fight that, how to fight the impact of that and the residual effects of that, not only will you do the right thing, you'll do very well financially. And that's the thesis behind so much of this activity.
Good and smart business, yet it's not where we want it to be. Give us a sense how you see this space developing over the next several years. I mean, ESG, the adoption came pretty quickly, and the pandemic, I guess, gave it momentum. What would give, investing through gender lens that momentum that's needed?
So I think every company going forward is going to be judged on 4 characteristics. One is financial strength, something they've been judged in before, but that'll continue. The second will be digitization. How do they deal with technology and the technological disruption that are occurring? Here are the other 2. DEI. Every company is going to be judged and should be judged by how does it address diversity, equity, and inclusion. And finally, ESG. How does every company do in managing its potential negative externalities and in being part of the solution to big challenges we face? Here's the good news going forward. The good news is there is so much potential if you just do 2 things. One, if you focus on solutions to the world's biggest problems, solutions to climate change. The Europe Green Deal, China's announcement of decarbonization, the announcements in the United States of what so many companies and states and governments are doing. The amount of business that will be created for companies that are intentionally addressing these challenges is unbelievable. Second, workforce. The workforce will need to be constantly re-educated throughout people's lives, so that we have lifetime learning, lifelong learning. We've invested in multiple companies that focus in that area, and there are many others. I mentioned the example of sustainable living, whether it's how we package our products, how we transport, how we get heat or cool, all those things, how we build buildings are about to massively change. So in all these areas, there is tremendous opportunity to buy companies whose intention is to solve these problems. Big opportunity number 1. Opportunity number 2 is the one I just mentioned, is the fact that there is massive untapped potential all over the world. First, when it comes to women who have incredible ideas, incredible opportunity that they've identified, but that because of unfairnesses in the system, those ideas and opportunities haven't been fully realized. Invest behind them, find those individuals and help rise them up in their company and help take their ideas and partner with them and bring them forward. So that's one opportunity, but it isn't just on the gender lens. I mentioned the racial disparities that exist. And so again, if you can find untapped potential, who among us would not have been loved to have been there when the bunch of scraggly guys came together and women came together and say, let's start Google. It seemed like a crazy idea, but they saw untapped potential. The same thing, company after company after company that we admire most were created because innovation comes when you find untapped potential. Half the world's population has untapped potential that isn't being taken advantage of because there is unfairness in our systems. And that is why this conference is so incredibly important. And that's why this isn't just doing it because it's the nice thing to do. This is the smart thing to do. And I think, to me, if there's a single word, or it's 2 words, that it would come down to, it is untapped potential. Half our world, 52% of the United States is female. Amazing amounts of untapped potential that exists there that we all should be doing everything we can to help leverage, to help the individuals realize, and to partner with them to be able to take advantage of.
Ken, I want to bring in the Biden administration and what the president himself could mean for this. He's promised to put gender equity front and center of its policies. His vice president is a woman, the first Asian American. He has more women in his cabinet than any other US president. Does it necessarily change the narrative? And does it necessarily change the investment landscape for investors?
I think it does. I think it has a lot of very positive potential in a number of different areas. First, you've identified the incredibly impressive women that the president has identified. Obviously, his vice president, most importantly, but others as well that are serving in the cabinet and elsewhere. Their ideas, their thinking, and their example are all extremely important, first. Second, some of the policies make a real big difference. You've noted there's a real focus that this administration has, which I salute, on the idea of building back better with a particular focus on climate resiliency and building a nation where we are better able to both mitigate climate change and adapt to climate change. That includes a number of components. Obviously, that includes building on the work that's been done over the last several years around renewable energy, building on the work that was done the last several years around building efficiency. And it means, if you look at the core of what the president proposes, a massive investment in building the infrastructure around the electric car. If we can build the infrastructure around the electric car and substantially build uptake of people using electric vehicles, that will accomplish several goals. First and foremost is climate. It will also create huge numbers of jobs in the United States. If you think about just the steel that is needed, that's American-made steel that will be needed to build the infrastructure for those cars. Those are great jobs in this country that pay good wages. So that's another area where you're going to have a double. You're going to have the climate benefit and you're going to have the economic benefit too. And to me, that has huge benefits, obviously, in both contexts. That's only a couple examples. We as a society are going to need to, and the president's put this forward, how do we build our healthcare system in a fairer way? How do we rebuild and enhance our public healthcare infrastructure? It was mentioned, you mentioned I'm on the board of Mount Sinai Hospital. Mount Sinai Hospital is the largest hospital here in New York. I'm very involved in an effort they have called IHER, the Institute for Health Equity Research. It's run by two brilliant physicians and two brilliant scholars. And they both understand what COVID has showed us. And what that is that the disparity between how COVID has impacted women and men, and in particular, communities of color and Caucasian communities, is massive. And that requires us to do three things, and we're very focused on those three things. First, it requires us to train our doctors and nurses and medical professionals differently, to understand these biases and address these biases. Second, it requires us to research. When we're doing research of how a particular disease is addressed or a particular drug works, we need to appreciate the diversity of our country and understand the impact different strategies and interventions have on everyone, particularly communities of color that have been left out before. Third, we then need to engage with the communities we're focused on. We need to take clinical best care and community organizing and marry them together. This IHER effort, as we speak, for example, is working right now with a community effort, wonderful organization in the Bronx. I live here in New York, and it's focused on African-American individuals that have diabetes and figuring out what we can do in partnership with that organization to improve the buy-in for taking the vaccine. That's not just important for COVID, because once we do that, we can similarly say, how do we deal with flu shots every single year? Comorbidities resulted from an unequal healthcare system in some cases. And how do we make that healthcare system more equal is something else that the president has emphasized, and he's right to emphasize. And also you're seeing lots of organizations like the Mount Sinai example I just described address as well.
I want to bring in, as we talk about equality, I want to bring in what's happening on Wall Street and that retail frenzy that we saw recently.
Yeah.
Well, it could still be happening.
Yeah.
The war between Wall Street on the one hand and retail investors acting in a pretty coordinated manner on the other hand, hedge funds losing billions of dollars. One investor, Kamath Palihapitiya, he says, it shows the narrative fallacy on Wall Street, the fallacy of wizards, that Wall Street was superior than anyone else. Others, though, call it a tulip mania on steroids. What do you call it?
I love the tulip analogy. I mean, there's also obviously there's Bitcoin. We all remember GameStop. Look, the reality is social media is upending every institution in society. And this is no exception, number one. And a lot more people are at home. And if they want to do investing, they can do that. That's very important. And finally, there are no fee trading platforms that have grown. All of these things together are democratizing investing in a way that we haven't seen before. And so to me, the answer to these questions is, I think people, for one, obviously they'll look into this particular matter and make sure that people follow the rules and follow the law and all that. But more broadly, we have to appreciate this. The world we live in is a world where there will be many manias. It'll sometimes affect Wall Street. It'll sometimes affect democracy. It'll sometimes affect business. But in a world where everyone at the same time is opining and participating and collaborating, is a world where there are going to be more trends like this.
So this is democratization of the financial market?
I think it's a combination of democratization and also the effect that social media has. And what social media does is, in my experience, is it can massively accelerate, you might call it a trend, you might call it a mania, but it creates a accelerated momentum behind particular thinking in a particular area. And you've obviously seen that in politics a lot, but we're now seeing 3 examples I just identified in the last 2 years where it's also happening with respect to investing. And so to me, it comes down to this. You should understand the fundamentals of what are your investment strategy and what are you investing in. And if there is overlap between those fundamentals and the mania, awesome, you can make a lot of money. But simply because lots of people are doing something or there's momentum behind something isn't necessarily reflective of where people want to be. There are people that invest behind momentum. That's great. But that's not true for everybody. So I think really not getting carried away or caught up in that, but understanding what your fundamental strategy is what's important.
Okay, we have some questions here for you, Ken. Are you ready?
Sure.
This is from Ankita Saha.
Too.
We can get back to my questions later, but this one's for you. You've been very active in fighting against workplace discrimination, among all, gender diversity, LGBT, etc., which according to you is the toughest to address and fight for and ensure a win. I'm not sure if there's a question in there, but I guess it's relating to how have you managed to do it? I mean, how do you view all these the challenges that you've had to encounter?
One of the most interesting things that happened this past year was that there was a Supreme Court decision that was actually a decision that was 6-3, written by Justice Gorsuch and including the Chief Justice, John Roberts, as well as the 4 more progressive members of the court. And what they all found was that Title VII, which is the law in the United States that prohibits discrimination based on gender, actually applies to LGBTQ people as well. Because what you're essentially doing is discriminating based on gender. So if an employer says that I have a picture of my spouse in the office and my spouse is a woman and it's okay, but my spouse is a man and I get fired, which is what happened in the case, then I'm being treated differently because of my gender, and that's not fair under Title VII. And what's interesting about that case to me, and what's so powerful about it, is that it shows the confluence between these different areas. And to me, the way I think about it and the way I think we should all think about it is both from a fairness and a decency and more important and less importantly, but importantly, from a business perspective, any kind of discrimination, any kind of bias, any kind of treating people differently based on who they are as opposed to what they deliver and contribute to the firm needs to be unacceptable and needs to be fought against. And that doesn't just mean obvious discrimination like the example I described. It also means we need to, as I mentioned earlier, look and say, where are the residual effects of discrimination that occurred for many, many years that today creates biases as between genders, as between races, and in other areas too.
A question here from Nitya. She wants to know, are gender sensitization trainings well received and effective?
So I have found our unconscious bias training to be very effective. It made me think a lot. I think they were very well received. My colleagues, I think, enjoyed it. And as I said, it affects everything you do. If you're an investor and you're not thinking about, you have unconscious biases. Every single person does. And if you're not thinking about it and fighting it, you're missing a big opportunity.
I've gone through the training. I think it's really, really good. When we ask for diversity champions in companies, why is it that women are put forth? I can
Well,
understand why the men are not coming forward.
Within KKR, I can tell you that among our most important diversity champions are Henry Kravis and George Roberts, two men, two of the founders of our firm. They think it's incredibly important. They're very active in this area. And it's an area that they constantly hold everyone to standards with respect to. Our Inclusion and Diversity Committee is led by Suzanne Donahoe, who's a woman, and Pete Stavros, the gentleman I mentioned before. Every single business unit has to have a specific plan around diversity, equity, and inclusion, and how they're going to improve that over the course of what they do with respect to their workforce and also how they operate. So I have found, at least at KKR, that there is buy-in, and not just buy-in, but leadership and ardor behind this among our women and our men colleagues.
What is your biggest piece of advice for getting started with diversity and inclusion?
I think the most important thing is you need senior level sponsorship and senior level support, number one. Number two, I think you need to realize how important it is to build into your systems. This can't be a nice thing to do. It needs to be built into your system. So if you're hiring, every slate of prospective hires needs to have a diverse slate that you're considering, period. Has to. People need to be judged based on their commitment and their support and their success with respect to these areas. And if you build it into the systems and there's senior level support, that makes a big difference. I'd also say we began our effort in 2014. We established our Diversity and Inclusion Committee, started by Henry and George and 8 senior partners at the firm, including myself. And we've subsequently made very big strides in a number of areas, although we still have a long way to go. But the key is understanding the power of compounding. The power of compounding is something investors are familiar with, but it's true in other aspects of your life too, including progress when it comes to diversity, equity, and inclusion. One thing leads to another, which leads to another, and it creates a momentum. And so where do you want to be in 5 years? Lay that out there and develop a roadmap to get there that'll help where momentum helps you move in the right direction.
So where do you want to be in 5 years, Ken?
Well, look, what I hope I can help do is contribute to an effort that KKR will have an important role in that will help ensure that first we're investing in companies that are addressing some of the world's biggest problems, like climate change, like sustainable living, like a more inclusive and equitable workforce. And we're operating companies in a way that people will recognize and enhance diversity, equity, inclusion, environmental responsibility, etc. So if we can operate all the companies we invest in differently, and we can invest behind these trends, we're making a difference. And then I'm personally, as you noted, very involved in a number of different philanthropic initiatives. So if I'm able, through the work I do at KKR and my own thinking and involvement philanthropically and otherwise, to advance equity, advance opportunity, that'll be a pretty good place, and occasionally appear on your show on Bloomberg.
I'll take your offer on that very inspiring note. Ken Malman, we thank you for your insights.
Thanks a lot.
Fascinating journey and fantastic achievements.
Thanks, and congratulations
and with that, Rochelle,
on the great summit.
Yes, Rochelle, it's back to you.
Thank you, Ken and Haslinda. Thank you for addressing the topic of unconscious bias. I think that affects policies and procedures. It's a constant challenge. What WinPE aims to do is at least address that unconscious bias at some level. Moving on to our next session, our next speaker, Renuka Ramnath. She's been an advisor to WinPE, the founder, MD and CEO of Multiples Alternative Asset Management, a private equity manager and advisor to funds of $1.5 billion. She has over 30 years of experience in the Indian financial sector across private equity, investment banking, and structured finance. Renuka successfully built several businesses in the ICICI group, including investment banking, e-commerce, private equity. As the MD and CEO of ICICI Ventures, she led the firm to become one of the largest private equity funds in India. She's the board member of MPIA, the Global Industry Association for Private Equity in Emerging Markets, and the first woman chairperson of IVCA. Renuka has been featured in many prestigious listings as well. The list goes on. Welcome, Renuka.
Thank you, Rochelle, for that generous introduction. So, after such a brilliant presentation earlier in the evening, starting with Stephanie, Anita, and Ken, I really don't have much to add. Quite honestly, I just feel like going back and start to work on all the excellent suggestions that have been made by the earlier speakers. I'll probably in 5 minutes set the context for the Indian reality on diversity. The good news first is that the participation of women in education, so when it comes to women graduates who are choosing science, technology, engineering, mathematics subjects, is almost 50%. It's 43%. There are 42% women who go on and become a PhD. There are 27% women chartered accountants. And in a more recent statistics, in the top 6 management institutes in India, the class of 21 would have close to 34% women. These are fairly impressive numbers. But if we go to the right side, which is the not so pretty picture of India, we have just 7% in PEVC industry. We have only 6% of a representation by women who chair boards. Women in listed companies is a dismal 3%. And women's involvement in the financial sector activity is 17% and so on. I don't want to read out all the numbers. But the question is, where are we dropping them in this ladder? You know, at the entry level, we seem to be doing quite okay, but we are losing them from the workforce somewhere along the way, to the point that a very, very insignificant percentage actually hold on and get to the top of organizations. So what do we do with this? I mean, I was just thinking about it. I said there are 3 responses that we can give to this issue. One is of indifference and say that, well, it is what it is. We are doing our best and this is where we have landed. With time, things will improve. And beyond a point, I don't want to be fussed about it. The second response can be one of hopelessness, that despite trying so hard, why is it that we have such dismal results? Maybe we are pushing water up the hill, and I don't think any amount of effort is going to lead to any more significantly positive results. The third can be actually going into an inquiry mode and say, why should this be true? You know, can I peel the onion and understand as to why this should be true? Before I get there, I first want to rest the case as to why we cannot put our head on our pillows and sleep comfortably with these ratios. All of you know that in India, our government has set a very lofty target of achieving a GDP of $5 trillion. I don't want to argue about the date. Will we get there by 2030? Will we get there a little earlier? It is a formidable task to be accomplished. We know that at this point of time, there is tremendous confidence in the Indian economy in terms of its growth rate. Hopefully, we will find financial capital from the rest of the world to come here to fuel our growth. But all of us know that the financial capital needs a matching human capital to make the transition of the growth and actually providing employment and creating a vibrant economy. From where are we going to produce that human resource that is required for this translation of financial capital into real goods and services? if we have this well educated, well trained, well intentioned women talent, which is raring to give to the economy, can we pay attention and to so many wonderful messages that can left behind, looking at unconscious bias, looking at policies, in terms of where is it that we have missed the point, that we have lost this talent which is not able to contribute to the growth of this economy. So going back, I would say that it is very, very important for organizations to realize that left to itself, it is not going to happen. All these years, we had left it to itself. We said that at the entry level, we are bringing in girls who are at least as competent as boys. And we are, even for a moment, if we assume that they are given an equal opportunity, they are dropping off somewhere in the middle. And that's what it is. That will not work. I think that it is important for corporate India to realize that there are certain things biologically different for women and through years of conditioning which are different. Women will bear children. Women will feel highly responsible for the home. If there is any crisis, any demand of time at home, it will always be that the woman puts up her hand. It's going to be very, very rare that it is going to be equally split between the man and the woman, or unequally split that the man puts up his hand and says, let my spouse go and attend to her work. So we have to recognize these two factors. We have to dig into our policies. To Ken's point again, he articulated it beautifully. Somewhere when these corporate policies were written, however, number of decades back, I think there is an unconscious bias that has crept in, which has been therefore kind of written for the men workforce and not for women workforce. Stephanie talked about how COVID has a potential to create a generational damage, because of the demands that women have had because of COVID. So COVID has also taught us that, flexibility is a big deal. And with embracing technology, as both Stephanie and Anita, emphasized, it is possible to make the workplace a flexible workplace, which is accommodating both men and women, so that we bring back many of this talent that we have lost along the way into the workforce. But that's not enough. We need to keep the ones that are coming into the workforce and not allow them to drop out somewhere in that ladder. And we need to fix these percentages and get them to almost 50-50 in the ensuing years. And I think a very, very hard look for each and every company into their policies and giving a fundamental new look and not a relook, not scratching the surface, not tweaking on the fringes, but fundamentally redesigning the workplace that allows for women to continue to contribute while they raise their children and keep their homes would make a very, very big difference. I think the initiative of WinPE is a highly commendable one. When Nupur shared this idea with me a little over a year back, I was instantly supportive. I am, for one, has to be in a family which has been very supportive of women continuing with their career. But I know very, very close to my heart that I'm probably in that very small minority of people who get so much support. And therefore, any initiative that allows for women to continue and leave a mark for themselves is something that's very dear to me and the firm that have built multiples. But what Nupur has done is truly commendable. In just 1 year's time, and that too a COVID year where physical interactions have been absolutely impossible, she has rallied the entire industry men and women to participate in this initiative from their heart and not to just check a box or look cool that I'm also part of this diversity agenda. I do participate in many of her advisory sessions, collegiums, and the involvement is so complete from both men and women who are committed to this industry, and therefore the hope and aspirations that WinPE can have is indeed, very, very lofty. The beautiful thing about private equity business is that a multiplier effect of our impact. On an average in India, we support about 2,000 companies every year. If each of us committed that this is a very, very important agenda for our economy to flourish, for us to create those jobs and make sure that the youth of India have a hope in future. And we all feel proud to have done our best within the capacity, within the impact, within the influence that we have. We will be impacting 2,000 new companies every year and whatever stock of companies that we have. And those companies will then become role models as showcaseable examples who would then create their own ripple effect in their own geographies, in their own concentric circles of friends and other companies in the industry that they can influence. So the ripple effect of the diversity agenda that the private equity industry can bring is indeed phenomenal. And I, on this very happy occasion of 1 year or completion of WinPE, besides congratulating Nupur and her team, I want to say that this is a very, very important initiative. You've given it the right push. You have made it very comprehensive from the presentation that you made earlier. It is not just about shouting from the rooftop. It is bringing in partners who are committed. It is providing training. It is providing sharing. It is bringing in mentors. It is giving classroom training. So it's a very comprehensive approach to fulfilling the diversity agenda. And I'm very, very confident that if we keep this momentum, this conviction and this commitment alive, we will get to a very significant shift. We may not get to a 50% in the next 10 years, but I'm sure the 3% that we saw in private equity industry can certainly go to 25% at least, and there can be an all-round impact. So congratulations and best wishes, Nupur, and we are there with you, rock solid in your initiative. I just want to leave this thought. This is what I personally believe, that I don't think a company which has not embraced inclusion and has had a equitable approach will be an admirable company, will be a desirable company. I don't think it will be respected by society. I don't think it will be able to attract talent. And therefore, this is not something that's nice to have or nice to speak about. I would think that we are already clearly in this journey of, only these companies would survive. And clearly we cannot ignore half of our population from the talent pool, as I mentioned at the outset, if we want to double the GDP of our country in as short a time as possible. Thank you.
Thank you.
Thank you for having me. Yeah.
Thank you, Renuka. Your insights were powerful, and hopefully the right side of that presentation, those numbers start looking good in years to come, and probably WinPE will play a very important role in that. But before I let you go, let me ask you the question. If you had the power to change one thing in favor of gender diversity, what would it be?
So almost everyone today spoke about anything that gets measured, gets done. So I would like to say that, first of all, I'm very impressed with the progress we made on women on boards, with the Government of India structure that every listed company should have at least one independent woman director. And even speaking purely about my own journey, I joined one of the public company boards as an independent member. Very quickly became the audit committee chairman and then the chairperson of the board. And then when I look around and talk to people and look at the impact, I think it has been quite profound. So I feel that if by statute we make it mandatory that companies present their diversity data to their boards and make it public, and also share a 5-year and a 10-year plan with their board and get measured as one of the important matrices by which they are judged for performance, we would probably achieve this journey, quite surely. So I would call for measurement and disclosure. I would not immediately jump and insist that they should get to 33% or 50%. Yeah. Initially, I would simply say, present what you are, make it public, give a plan and stick to it. And let the board, which has diverse set of people, responsible people, make sure that these companies are taking stretch targets on diversity and inclusion.
I agree with you, Renuka. I think it's all about disclosure at the start, at least, and then pave the way like we do a business plan, right? Yeah. But thank you so much, Renuka. Always a pleasure having you.
Yeah.
No birthday is complete without a few testimonials from near and dear ones. In this case, it's WinPE's well-wishers. So here's a short video montage. Enjoy.
It was very much needed for the investing community.
I think the bricklayer that has been formed is truly phenomenal.
Taking an organized step towards fostering women representation in the entrepreneurship and investing space in India.
Kudos to them for bringing this wonderful idea to life to empower women.
WinPE has fostered exchange of ideas and exposed us to best practices from our peers and from within the industry all over the world. This has helped us deepen the agenda pertaining to gender diversity within our firm and also
I think we have a small technical glitch. We may play the video again due to the delay in the audio and the video.
It was very much needed for the investing community.
I think the bricklayer that has been formed is truly phenomenal.
Taking an organized step towards fostering women representation in the entrepreneurship and investing space in India.
Kudos to them for bringing this wonderful idea to life to empower women.
WinPE has fostered exchange of ideas and exposed us to best practices from our peers and from within the industry all over the world. This has helped us deepen the agenda pertaining to gender diversity within our firm and also helped us drive this.
I think we'll let that video pass. There seems to be a bit of a technical issue while playing the audio and the video. But for anyone who would be interested, we'll post this on the WinPE website. You all can have a look at it and enjoy the wonderful testimonials just talking about the power of WinPE. So let's move on to the next session. We have a dialogue between two titans of the industry. Mitch Truitt, co-CEO of Apex Partners and chairman of Apex Digital, and Zia Modi, co-founder and managing partner, AZB Partners. Prior to joining Apex Partners in 2006, Mitch was the president and CEO of Orbitz Worldwide and the EVP and COO of Priceline.com. Mitch is a graduate of Vassar College, where he received a BA in political science. He's also an MBA from Harvard Business School. He serves as a board member of Boats Group, KAR Global, Quality Distribution, and TradeMe. Mitch serves on the charitable boards of Apex Foundation, the John McEnroe Tennis Project, posse, and street squash. Moving on to Zia. Zia is an advisor to WinPE, is one of India's foremost corporate attorneys, widely acknowledged for her expertise, ranking #1 in Fortune India's 50 most powerful women in business list in 2018 and 19, on which she has consistently ranked in the top 10 since 2011. Zia has held and continues to hold several prestigious positions at global and national levels, currently serves as a member governing board in the International Council for Commercial Arbitration, CII National Council. She was the president and the member of the London Court of International Arbitration and the member of the World Bank Administrative Tribunal, Washington, D.C. Zia served on various capacities with several committees and panels. She completed a master's at Harvard Law School and is a member of the New York State Bar Association. Zia practices in areas like mergers and acquisitions, private equity, restructuring, and general corporate compliance and investigation, dispute resolution, regulatory, and securities law. Welcome, Mitch. Welcome, Zia. Over to you. Zia, you're on mute. You may just want to unmute your mic.
Phew, I was worried it was me.
Zia, you have to unmute your mic.
Oh dear, can you hear me now?
Perfectly, yes. Nice to meet you.
Very good to meet you. I'm looking forward to it. I just said that I'm in a beach town out of Bombay where the internet is letting me down. So Shashank has been sequestered in to take my place in case I can't do the moderation seamlessly. But I hope that that doesn't happen. It's a real pleasure. And we'll start off with some good questions for APACs. First of all, I hear you have 4 children. And how many of them are girls? Can you tell us?
I have 3 boys and 1 girl. So I've got twin 20-year-olds, and one of them is a girl. And she's a sophomore at Yale, and she's on a gap year right now.
Well done. I have, we are 4 siblings, and I'm the only girl. So,
all right.
Well done. Really nice to have you on the platform, and I know WinPE will be delighted that you've given the time. Let's start with the question that everybody's being asked, which is that if you had the power to change one thing in favor of gender balance, what would that be for you, Mitch?
Yeah, it's interesting just listening to Renuka. It's the point that for me that people make a real commitment to change, because I think it's easy to turn this into a box checking exercise or something bureaucratic. And for me, this is, works when it's authentic and it really sort of germinates from the ground up. And then it's that commitment that people need to make up and down the chain, which is you really need to make a commitment to changing the way that you hire, the way that you review, the way that you staff, the way that you promote, the work environment, and the reason to do it is because you're going to end up with better outcomes, and you're going to end up being able to attract the right people, and because it's the right thing to do. And I think that combination, when it's not somebody else's, you're trying to please somebody else, or it's when you fundamentally believe it's the right thing to do, and then you have to cause change, and you have to be committed to causing change, and you have to be committed to exposing your flaws and being vulnerable, because we're all terribly flawed on diversity issues, as Ken mentioned, on unconscious bias and so forth. And so for me, it's really just that fundamental commitment to change, and not words. It's deeds, not words.
So one of the things that I'm a big believer in small steps rather than big bang solutions, which are always more difficult to achieve. I always thought that, if we've talked about this unconscious bias in private equity for a long time now, and it's not deliberate, it's just a men's club up for so long till Nupur has come and tried to shake up everything, and hopefully in India at least it will happen. But I've always thought that if we gave middle management KRAs, that actually you will be measured for your performance based on your ability to retain good women. That would be a very profound impact, which people would be driven to achieve because it is a KRA. And then it becomes an individual commitment, which after a couple of years becomes habit forming. So it's just like in India, nothing gets resolved without quotas because nobody wants to do things voluntarily. And as Renuka said, when we had a statutory requirement for a woman to be on our board, suddenly every stupid woman who could never be a director suddenly was made a director according to the men. So I always tease my clients when they come to me with this merit talk. I always tell them I make so much money because most of you do such stupid things and all of you are men. So how is it that all of us have to be fabulous women and you can just be average or below average men? So I say that, in terms of actually making it a KRA for men and women in middle management can actually achieve a very direct and a very quick outcome, so that if somebody is about to go and it's a competent woman and it's going to affect your review, you will try and figure out the real reason she's leaving and try and get her to stay. So
Mitch, you might have to just be a bit patient.
No sweat.
Because she's dialing in from Alibag, where the internet connection is extremely patchy. We may have to get Shashank in case Zia doesn't work out. We'll just give her probably 10-15 seconds.
I think it's fine. Should I maybe try to go with where I'm guessing she was heading? I could try to answer that.
Yeah, take a shot at it, Mitch. You're all yours.
I think the by the way, the KPIs that she's referencing, that it's part of somebody's mandate and review, I think is 100% right. And we actually have our own live example of it in India. Shashank, who may or may not join in, is a fabulous investor. The team is has an unbelievable track record, is so well known. But we sat down a couple of years ago and said, look, it's a significant initiative at our firm to have the right gender balance, and we don't, and this is not okay. And by the way, most people in PE, right, they're finance people, and finance people don't have a great history of being known for being great managers, right? It's a little bit of an individual sport. And so, we've sort of said at our firm, it is a part of how you get reviewed. It is a part of my job and Andrew's job, my co-CEO, to make sure that people are making progress on this front. And we had this conversation with Shashank, for example, who, by the way, is substantially committed to this as well. Basically, he was quite aggressive in sort of saying the next hires we make will help change the complexion of the office. And the beauty of it is, with all these things, is if you open the aperture and you create the right environment, you hire phenomenal people. And so we made two meaningful, hires. We're now 20% gender diverse in India. It's a start. It's inadequate to where we need to be. But we have a superstar on the team who I think, has just great running room ahead of her. And so, my view of this is, it is what gets measured, matters, and you have to be committed. It's my point about deeds over words, and it has to be part of the KPIs. So I couldn't agree with Zia more. I get confused about quotas because on the one hand, I sort of think that if you don't force change, you don't get change. But on the other hand, I see all the negative pitfalls of quotas. We internally have set our own benchmarks and just said we are going to achieve things for ourselves, and we'll announce what we're trying to achieve. And the worst we can do is fail. But we measure the heck out of everything. This is going to be the one thing we say, oh, we can't seem to manage. That seems like it's BS. And so we've chosen to do that. So I think Zia is where I'm guessing she was heading. I couldn't agree with more.
Zia, since you're back, I'll let you take over. Yes, absolutely. Since you're back, I'll let you take over.
I don't know if anybody can see my face. I'm so sorry, Mitch. Really annoying. But what I wanted to ask you is from an APAC's perspective, since you've taken over as the co-CEO, and obviously this is a topic dear to your heart, how do you measure year on year your statistics as APACs? Have you felt the need to put it out there in the PE community and in a way to call out your peers into getting them to follow your leadership role in this area? Or is that yet too soon to do? So how do you share learnings with the community? I mean, everybody now is not going to challenge the proposition that ESG includes gender diversity. Gender diversity companies are normally, give better value, give better IRR. That's all digested already. But then from a leadership point of view as APACs, what have you done or plan to do in the PE space, which is what WinP is all about?
Yeah. So look, I think I think a lot of our peers are quite committed to change, and I think that I'm quite concerned about, or be quite cautious about, trying to claim any sort of victory or superiority here, because even if that's true in any sense, what would make us as the world's tallest midget. I think that this industry is woefully inadequate in where it is on gender diversity, and in my opinion, we're no different. We've committed to change because it was a top priority for Andrew and me when we took over. We sat down and said, what's the biggest impact we both want to have? And we landed on gender diversity, and that subsequently expanded to diversity and inclusion. It goes back to your question up front. I have a daughter who is, an absolute rock star, and she ought to be able to have access, and she's going to be phenomenal for whatever company she works at. And so I think it's super important. So what have we done? We basically started by doing a bottoms-up analysis of what it actually looks like. How diverse are we? And that is not a fun exercise when you're as poorly diverse as we were on a gender basis. So we started at 7% of investment professionals. And you can always bluff yourself and use back office and all these other things and convince yourself you're higher than you are, but that's not true for where people are talking about here and what we should want to do. And so our goal has been, we started out and we said, well, should we set numbers for ourselves? And this is an apprenticeship model where it takes years to train people. And so you have X amount of people come in as associates, and then X amount move up to vice president, and then move up to principal, and then partner. And that run is like a 12-year process, which is ages, an eternity. And we're a wretched industry for lateral hires, right? If you hire at a senior level at a PE firm, you are taking real risk. Most don't stick. And so it really is an apprenticeship model where you're training on the way up. And so we did set benchmarks for ourselves. And we said, there's this amount, if we're going to have this amount of partners in 12 years, then we're going to need to hit all the stages along the way. The worst we can do is miss, but we better be accountable. And so far, the two benchmarks that we've set in terms of vice presidents and principals, we've overachieved. And out of that cohort, we just promoted our first partner, which makes our second partner. But that's out of 25 partners. So let's be honest about where we are. Overall, we're at 24% diversity now, gender diversity, which is more than 3x where we were, but still inadequate. So I don't feel in a particular position to preach to anybody else on this topic. I feel like we need to do what we need to do is right. There are other elements to this, which is we have to permeate our portfolio companies. So it can't stop at our firm. Our firm's a small firm, but we have 100,000 employees in our portfolio. And so we have to get this down through board level, through the C-suite. So we actually, every time we review a company, we review at every portfolio review committee, we review gender diversity, gender policies. Tell me what the overall makeup of the company is. Tell me what it is at the C-suite. Tell me what it is the board, at the board where we control appointments. If we don't control appointments, it's harder for us to have an impact. And we do that based on gender. We do that based on ethnic diversity, on race, and all in the hopes of getting better. The other piece that's critical here, and I can think of it vividly, I recruited a woman in our healthcare group who I think is just a superstar. And she said, everything you say makes all the sense in the world. And I love all the changes you've made and all the rest of it. Where are all the partners? And it's a good call out. And my answer to her was, if you don't come, I can't change that answer. So we need you here to help change that answer. And that's critical. We have to all get involved, and people are going to have to take a leap of faith with us too, because, we're imperfect and we're learning along the way as we go here too. So, but it's about commitment. You better be committed to it, because you'll find out fast that, there's just so many things. We do a gender training around reviews, for example, and women are much more apt to be self-critical than men. And so when you start with reviews, if you actually read the employee's review first, you get anchored to a position. It's just human nature. And so we've actually gone through a bunch of training about how to do the review, how not to read the review first, but to make sure that we create the right playing field for that. By the way, if you go back and you look at applying for a job, women will apply for a job when they believe they have 90% of the qualifications. Men will apply for the job if they have like 40 or 50 and BS their way through. And so there's all these pieces along the way that you really need to be, there are differences in gender. And if you ignore them, then you're not going to have progress. And so it's about really getting yourself educated. Well, right, that is the world's longest answer to your question, so I apologize, but I think it's the totality of it you have to be committed to.
Great answers, all of them. And the fact that you've gone from 7 to 24% is fantastic. I mean, that is a large jump. And you're right, even in a law firm environment, when we have youngsters join us, about 60% are women in their freshers. But as you go up partnership, it dwindles. And I'm happy to say we have over 35% of our women who are partners. So that's
Wow.
a nice number for us at that stage. But, it would, I'd be, and I'm sure the audience would be really interested to hear from you. What are the biggest challenges you face in retention? As a woman who's a managing partner, it's easy for me to relate to what would make a woman just quietly say, I'm done with it right now. And then, the problem with all of us, we're human beings, is when we want to come back, we don't want to be seen as behind our peers. We always, as women, have more self-doubt, as you mentioned, wanting to fulfill the 90% of the criteria of the job. And so coming back is hard, so retaining is key. And giving them, what I call the safety nets along the way to ease the bumps is important. But how have you managed, or how does Apex manage, or how do you think your industry manages to face this challenge of retention?
I think it's the number one struggle that we all have. And we actually retained a consultant that KKR had used, who's excellent at sort of going through and pointing out all the support areas that we could be creating, whether that's, nannies for when people are traveling and so forth, or it's a change in workplace culture or remote work. The truth of the matter is, a lot of that in my mind is window dressing. I mean, is it really going to make that big of a difference that a nanny is available when you travel? Maybe, but the truth of the matter is you have a fundamental challenge of trying to balance two things that are quite difficult. And so I think for us, it's been about a little bit changing our definition of FaceTime and how people work. But I also think there are things that we have to do that are uncomfortable for us. It's hard to codify when somebody's ready for a promotion, or it's not just time-based. It's experiential and so forth. And so if you're a woman and you're going to have a maternity leave of 6 months, and you have one, does that impact your career path? And if you have two, does that impact your career path? And we, used to sort of sit by and say, look, it's case by case basis. And it turns out that, and it's totally understandable, but it turns out that if that's the answer you give people, then you feel like, to your point, you're behind. And it's inequitable. And so our view was to say, to try to codify it and say, one has no impact on your career progression, and two likely has no impact, but three definitely will. If you're out for 18 months of a 6-year period of time while you're a principal, that's material. And so, none of it's perfect. But I think what we found was that a lot of our female professionals were saying, hey, make me a principal as fast as you can. I want to do that because then I want to, start, my personal side of my life. And I want clarity around that. And so we're doing our best to provide clarity where we can. It's, again, as I say, it is still a little bit case by case, but it's better for people to know. And, in addition to it, I said this before when you were off, but we're in the financial services industry. Most people, I'm an exception. I think I'm the only person who helps lead a major private equity firm that operated for a big part of their career. But most people have never managed many people. And so, being a good mentor, being a good manager, those are not natural skills for people in private equity. And so we've brought on people on board who do psychographic testing, team composition, so that we get our managers to be better managers and better reviewers and better mentors. And so it's sort of all part of the equation for us.
I think that, Indira Nui has said very often that the biological and the professional clock of women just clash. Just as we're about to wanting to become mothers, we are reaching the stage of our careers where we can climb. And it's often a struggle, and guilt always triumphs, at least at that stage, most times. And what I found is basically, what I personally do is, if I know a young woman is about to get married or have a first kid, basically instruct my partners that if normally somebody would do 10 deals a year or 12 deals a year, that person only does 6 deals a year. And that's it. It's not tom-tommed about, it's not looked down upon, it's not given as a negative proclamation, it doesn't affect the reviews, but the workload is just simply lessened. And the woman is allowed to keep her place in the step up, allowed to stay current in the knowledge of the profession, allowed to keep meeting with her clients and interface with her peers, just has a lighter load without being put down about it. And that has worked well for some who are happy for the safety net. And one thing that you would have learned, Mitch, I'm sure, is that we women are loyal creatures. We're sticky by nature. We don't like to move if we don't have to. And we appreciate what the organization does for us very often. And it's the small little things. I had a young woman who was having a baby, and we give 6 months off. And she phoned and she said, I really don't want to stay at home for 6 months. And I said, why not? You need to just be with your kid. She said, can't you do something for me in the workplace? And so we just did a bespoke. We had a partner cabin next to hers. She was a young partner. We trundled that partner out, gave him another cabin. We just converted that cabin into a creche for her baby. And she promised that, the nanny would make sure he wouldn't scream and shout. And it turned out to be a wonderful example that we could then tell our other women that, look, the organization can think differently for each one of you. Don't go away. I think the message is, don't go away. Come talk to us. And that's where I think, Mitch, as male champions of change, Apex can certainly, give hope, if you like, to its young female upcoming leaders by having conversations. It's difficult sometimes for a woman to walk into a senior male boss's cabin and talk to him about her woes, which she thinks he will think are very mundane. And therefore, one of the things is maybe as men, and women yet don't rule the world, only try to hold up half the sky, it is ultimately male bosses that are decision makers still by and large. And therefore, to have an open ear or to actually call problems out in a conversational manner, I think is one of the best ways to retain, if you ask me. That has been my experience.
I think you're right. By the way, I also think, when you lose somebody is the most painful time, because that's when people are wildly transparent with you about, what is or isn't working. And we try, if that's going to happen, we try desperately to understand all the issues. One thing that you just mentioned was quite interesting for us was, we actually are we give quite extended paternity leave as well. And we actually encourage our folks to take the paternity leave. But so there's a big generational difference, right? I mean, I had 4 kids, and we had ours. I think we had 4 2 and unders at one point in time, which was mayhem. And so I was rushing back to the office because it was quite overwhelming. But I think generationally, this generation wants to be at home and they want to participate. And I think, again, if you want to have differences in gender not stick out so much, and by the way, out of fairness, like if the man is going to be home too and has a long paternity policy, he's facing some of the same issues too. And so I think the reality is it's a very different society today than it was when we grew up in the industry, and we have to adapt to that.
Absolutely. And I think that, as you said, as we've heard many times from Peter Drucker, culture eats strategy for lunch. And if we want our culture as Apex or any other firm to define who we are, then true diversity and a genuine openness about it has to be one of the things that makes us attractive to have a workplace that people want to come to. But moving on, I think everybody's interested in hearing a bit from you about the current investing climate and the challenges that you may have faced in the last year.
Yeah, I mean, I think it's a strange dichotomy because the last year has been so terrible for so many people. And I looked at the news this morning, and it's in the U.S. alone, it's 500,000 deaths and almost 30 million cases, and we're a fraction of the world, a big fraction, I guess, of the world numbers. And I guess you look at that, and it's been devastating for socioeconomic reasons. There's been so much political division and strife, and you feel guilty because if you're in private equity, it's hard to be a better time. And we probably just had a record year. We hit our hard cap on our fundraising. We sold companies, returned capital to our investors of well over $7 billion. We made 4.5 times money on that. I mean, and we've been investing, pretty aggressively. And I actually just looked at the run rate of our portfolio company EBITDA, and I realized that our companies are at 130% of pre-COVID at this point in time. And it's because we invest in sort of the faster growing parts of GDP. We invest in technology and digitization, things that have benefited, and we also we have a style of investing that's a bit transformative, and so we're less macro dependent and a bit more micro dependent. And so it's been really a very strong year for us, but yet it feels guilty, and we're all very fortunate to be where we sit, and so it's super important for all of us, I think, to be aware of how lucky we are and to give back, and to be just aware of what's happening socially in the world. And so, now, of course, investing is getting harder and harder, and it's getting harder because asset prices are inflating like mad. If you do what's been happening with sort of fiscal policy and monetary policy and the rest of it, you're making interest rates are free or negative or whatever else. You're making asset prices jump, and so you really have to be disciplined ultimately, because it's the time of hubris that everybody jumps in at the top and says that they're the ones who get it better than the next guy, and so forth. And the truth of the matter is, you got to be disciplined and stick to your knitting and know what's been successful for you. And that's hard to do, and it's hard to do in a world where investors are throwing money at you because you're the best place to get a return. versus, losing money in the bank. And so you really, I think staying authentic is the key. And that's what we try to do, every day. And that's a challenge.
I can imagine. Well, all I can say is that just listening to you, I can tell you that Shashank and team actually do what you are saying on the ground, and I've experienced it personally. One thing Shashank just hates is being in a bid situation, because the values go nuts at that point of time. But as a law firm, as an intermediary, we've suddenly seen a huge jump in the interest that private equity had. I think they all held back their dry powder during COVID, and now suddenly the funds have been raised, the time to invest has come, and so there's going to be a flurry of activity, I'm sure, in most of the markets that you're in. But again, the audience has, a lot of young entrepreneurs, and I think they would be very curious for you to give them, what are your top 3 lessons in building a business to sustain? As you said, you've come into private equity after managing businesses. So you've got an entrepreneur, an investor, an operator. What would you guide the audience in terms of these 3 sustainability lessons?
Yeah. So for me, and it's not anything terribly epiphanous, but for me, I think what you said up front, which is that culture trumps everything. And I think that if you can build an environment where people can be comfortable taking risk, and it being okay to fail, and that you iterate quickly. If you want to create something, you have to take risk. And if you create an environment that stifles risk, that's a problem. I'd say within that environment, it has to be transparent. It just has to be that the culture is transparent, so that if you make a mistake, you can rectify it, but also so that people have a trust basis. You work as a team. Nobody achieves anything single-handedly. And so you really have to have the right culture. So I think that's number one, and focusing on culture, and it has to be authentic. We this year, we had Apex Thrive be created by a bunch of our employees, which is our LGBTQ group. And it wasn't something that came top down. We've obviously created a culture that people felt comfortable and supported, and have chosen Apex as a place to work for that reason. And so I think when you see things like that happen, it feels really good for for your firm and for the future of your firm. So I would say that's number one. Number two, I think it was either you or Renuka who said, I think it might have been you who said you believe in like sort of the amalgamation of small changes to get an end result. And I believe firmly in that. I think that firms, companies, everybody has this view that what happened is they came up with some massive epiphany and they changed the world and so forth. And the reality is most of what it is taking a product that appeals to a consumer, and it's about an aggregation of marginal changes, really when you're focused on a couple of things, executing a couple of things and executing really well, that you achieve. And what you do when you break that down, if you're just focused on a couple of things, is everybody at the company can be aligned around those couple of things, and they can know whether they're moving the needle on those couple of things. And I think that the companies that struggle with being too spread out, trying to do too many things where nobody can really track progress, they don't make progress. So I think that's super important as far as I'm concerned. And then I think it's about people. You got to hire the right people. And it's funny, when I started my job at Orbitz, it was a little like Groundhog Day. Price on Orbitz aren't wildly different companies. And I went in, and all of my direct reports were men coming into the business. And I said, does anybody here know what percentage of our customers are women? And 65% had a household making a purchase. And it's a bunch of men making the decisions for them. And I said, look, guys, like this has to change, right? Like we need the right team to understand our customer and to be relevant. And so I think it's about, who you hire and who you bring together. And everybody else has this impression that you have to hire all type A superstars. And that's not true. You need a team. And so what you need to do is to understand what complementary skill sets go together to build a team. And so you need role players, and you need people who are Indians and chiefs. You need to have that combination. And I think people are too simplistic on thinking, give me a bunch of type A meat eaters and we'll take the mountain. What'll happen is you'll destroy each other before you ever get to the mountain. So those are probably my three. There's probably many more thoughtful things to say than that, but those are what hit me.
Well done. That's really well put. I couldn't agree more. I just couldn't agree more. And I think as ESG becomes more and more prominent as a GP, you will find yourself having little choice but to make sure that all your portfolio companies climb up the scale in the ESG index, so that when you want to flip them or you want somebody else to come in on the next round, that value creation will reflect based on how much ESG indexing you've been able to achieve in your portfolio companies. And so really, as Ken was saying, KKR, and I'm sure all of you big boys, have a unit which is basically to drive ESG down the chain into your portfolio companies. As a law firm, we are seeing these questions being asked more than ever before. I mean, 5 years ago, I would have said, somebody teach me about ESG. Now, if everybody doesn't know at least what the basics of ESG are, they have a problem, because it is being talked about all the time. And if it, trickles down, everybody wins, right? Everybody wins, especially the gender diversity progress that WINP is trying to strive so hard for.
Yeah,
Okay,
I agree completely, by the way. We're very lucky. Our founder, Ronald Cohen, is sort of the father of impact investing, right? And so we've had a foundation since day one, and we've had in the ESG front, because we're co-founded in Europe and the US, particularly European influence, we've been way far out ahead on that. And it has zero to do with anything I did or Andrew's done. It's the fact that our founders were so committed to it, and have put us out front on it. And we're lucky to have that legacy, because it's super important right now, and it's going to get just ever more important. So we're beneficiaries.
And
of
this is the Apex Foundation that you're on the board of. Is that the one that?
Yes, that's also we
what your founders set up.
Yeah, we committed long ago to taking a piece of our earnings and putting them into the foundation and supporting major causes that our partners, employees, and so forth are committed to. Oh, did I lose you? I think I may have lost you again, Zia.
Can you hear me?
I can hear you perfectly.
Go ahead, Rochelle.
I think I have you back, Zia.
So sorry. Go ahead.
No worries.
Sorry, I was just thinking whether it's time, Rochelle, for people to ask Mitch some questions. Is there time for that, or how are you taking it?
Zia, let me ask you the question first. If you had the power to change something in favor of gender diversity, what would that be?
Who are you asking?
I'm asking you.
I just offered my solution after Mitch did. That I would get all my men and women partners to have KRAs, depending on how they retained good women.
Wonderful. We have a few questions which are on the screen, Zia. If you can, it would be great to address that. We have a few minutes.
Now,
why don't I
Rochelle,
read that for you?
I can't even see these questions because I'm in such a technologically dysfunctional place. Why
So let me
read
take
the
that
questions
over
out?
for you.
Let me take them. Yeah, if you don't mind. So sorry, Mitch.
Mitch, how can we harness the power of digital transformation to solve gender diversity?
I mean, it's a great question. I think that one thing I think a lot about coming out of COVID is just I fundamentally believe how we work is going to be different. and it's going to afford different work styles for people. And I think in that case, something like the forum that we're on right now, none of us could have imagined that this was going to be what we would do this year, and that it would be effective. It has some technological glitches, which will get better. But the reality is, I think that in that way, it can help democratize things. And obviously, there are a lot of I think biases or things like that you can really solve for in that case. Certainly, I think of digitization much more broadly than just going online. When you think about in terms of the use of data and machine learning and things like that, that I think ultimately are going to can create a more level playing field. I think my wife thinks I'm Pollyannish on this topic and thinks that she thinks that the big technology companies are a lot more devious than I may. But I think that there's opportunity there.
Let me take another question here, Mitch, for you. There have been efforts taken since several years to try to have gender balance at the workplace. Unfortunately, there's no much progress made. What, according to you, could be the biggest reason?
Well, it goes back to my look. I think it's a lot of things, but I think you have to take a holistic view to it, and I don't think historically we have. I think we've taken the view of let's hire a few people, and let's see if we can make progress. And the reality is that it's just so much deeper than that, which is it's funny, people hire in their own image. So what I found at our firm was we had a bunch of male associates who would go out and interview, and then they would put a test, a modeling test, a financial modeling test, and we would go hire from banks. And it turns out banks weren't gender diverse. And so we were hiring from a male pool. We were putting them through a test of which they had limited training for, which, by the way, they could learn no problem on their own or at Apex. The real question was, were we hiring for intellect? And so we changed who was doing the hiring, who was doing the interviewing, who was doing, what were the criteria we're hiring for? And then when we brought people on, we changed, sort of the environment for people in terms of training and mentoring. And which by the way, there's just so many cultural differences, right? But we found just bringing in from banks, I think at a bank, what the expression is, you're to be seen but not heard. We have the exact opposite environment, which is you're to be heard no matter where you are in the company. Every investment committee, I want to hear from everybody who's on the deal team. And we actually had gender differences there. And so we've got a coach for presentations, and it's for everybody. It's for men and women. And so I think it was just about that commitment. And then it was about looking at, pay and promotion and reviews and so forth, and just saying, is the field really balanced? Are we free of biases? And the answer is we're not free of biases, and we've got lots of progress to make. And it can be all sorts of small things. I might grab people and go out for a run. I might be more apt to do that with a male colleague. I have to make sure that that's available to everybody as well. And so there are just a bunch of steps you have to take and be committed to. You have to hold people, as Zia says, for their promotions accountable to it. And you have to have a group commitment. I personally, this happens to be something I'm and my co-CEO are very driven by and committed to. But the truth of the matter is, the one place I might view it differently than the way Ken stated it is, for me, when it's bottom-up driven and it's authentic from people, is when you really, really see change. When it's something where I'm telling you this is how it has to be, you'll go through the motions and whatever else, but you won't feel it and you won't believe it. And for me, what I think is most gratifying that I'm seeing it take hold, not just at Apex, but at lots of places, is that this generation demands this and sees the need for it way better than any other generation, and they will drive the change if you put them in control of it. And so I might do that a little differently. And by the way, Ken may be saying the exact same thing. I just listened to the end of his, but for me, this is, I get it that you need top-down sort of sponsorship and commitment to it, but you need bottoms up. It needs to be believed by everybody.
You very beautifully put it, Mitch. And in fact, one of the very important things that WinPE is doing is addressing the funnel, right, from the entry, as to how you can ensure there is no bias at the entry level for hiring, keeping the hiring processes blind, so on and so forth, so that those biases don't set in. Let me take the last question with you, Mitch. And this is an interesting one, and I'll just add a little twist to it. What would your advice be to your daughter and young women in general if she or them were working in a primarily male-dominated workplace or industry? What strategies would be key to navigating the workplace successfully?
That's a great question. By the way, I'm pretty confident she will be working in a primarily male-dominated industry. It feels like a pretty safe bet. And I think that what's fascinating in watching her, and she's clearly her mother's daughter, not her father's, is the level of preparation that she goes to before she will present something or take a risk is like a night and day for me. That's probably true for most people, by the way. It's probably not just gender. It's probably a statement on me, but I would encourage her to be willing to take more risk and to put herself out there. I think she's more cautious, and it may be gender related because she feels like she has to have the perfect answer. She has to have a knowledge set. She, by the way, has called me. She has an interview for something today. She's called me 4 times during this Zoom, and the reality is my sons won't call me once for that, and it's because her own expectation of what it takes and what she needs to be perfect and right and so forth is so high that I would encourage her to be willing to take more risk and to live with a little more ambiguity and so forth. And I think it really is gender driven. It's just, the perceived of what you have to do and what you have to be is perfection. And that's an unrealistic aspiration for anybody. And it's BS because men get away with a lot less. And so that would be my, just based on my personal experience, I would sort of inject her to be a little more bold on this stuff.
Thanks, Mitch. I think that's a powerful.
Chip in.
Yeah.
I can chip in for a minute, Mitch. I think that, it's centuries of just not having the stage for a long time. So I think the diffidence has become a cultural issue that we need to break. Hopefully, your granddaughter will not have that same issue. But I know that when I came back to India, I had finished law school at Harvard. I'd done 5 years at Baker and McKenzie. I was as opportunity given as one could get. But when I came back to India and I had to practice in court as a barrister, I was literally the only woman opening my mouth in that whole courtroom. They were all men. And therefore, the anxiety attacks that you would have before you walked in there because you were on display, I think that's what your daughter is making.
I unfortunately think we lost Zia again, but I think she's totally right and obviously, wildly successful and hugely impressive. So this was a pleasure for me to meet Zia and Rochelle. Thank you for having me.
Thank you, Mitch. Wonderful suggestion to be bold. I think that's important for women to take on. Thank you for the time. I hope we can get Zia back because she's doing the closing address. But wonderful to have you, Mitch. Thank you so much.
All right, thank you.
So we will have Zia, who's been the champion of WinPE, do our closing address. Hopefully the internet just works in our favor today. We'll just wait for a few seconds. While Zia comes back on. Zia, are you all online?
Can you hear me?
I can hear you now. Loud and clear,
Can you hear
perfect.
me?
Yes, absolutely.
So sorry. I am so sorry. Please apologize to Mitch also.
No problem, Zia. I was just telling the audience that you will be doing the closing address. So why don't you take over now?
Okay, I hope this internet lasts. I'll do my best. I'll do it quickly. But I think all of us have had a great time. I certainly have learned a lot from all our speakers and our moderators, all great champions in their own right. So let's see what is happening. You've got 1 year of WinPE with Nupur and her great team. And I think it is fair to say certainly that the awareness factor of women in private equity has certainly shot up. So congratulations to all of you. Why did I happily join the advisory board of WINPI? Because for me, this is a very special subject. It's very dear to my heart. I truly believe that unless men and women are treated equally and move equally, society does not soar as it should have. For me, it's actually a religious belief, because I'm a Baha'i by religion, and our Prophet mandates that men and women are equal. So I always tease my father, who is a Zoroastrian by religion, that he has no choice but to treat me completely equally. At which point my brothers say, equal is one thing, but more equal is not what any religion mandates. So I think that the time has come for the reality, which has already been accepted. It is a great ecosystem to get this inclusion and diversity agenda going. You've seen today people like Renuka, Anita, all our women leaders, women unicorns, all of us being able to tell the world that if you invest in us, not just monetarily, but if you invest in us thoughtfully, we will give you a much higher payback than you ever expected. And so I think the men's club mindset is changing. The awareness is changing. The naming and even a little bit of shaming is helping the agenda go on. You know, the statistics that I think the World Bank puts out for India is that we have a leaky pipeline of women. 48% of our women that join the workforce leave the workforce in India. Now, can you imagine the loss to the GDP? We heard about $13 trillion being lost because women are not gainfully employed in the workforce. And so I think the untapped potential that we have in the private equity industry for women, I see that men are much more now willing to allow the pipeline to be not only started with more women, but they are more interested in taking a more thoughtful look and bespoke look at retaining women. I always tell our partners when women leave that how stupid are we? We invested 8 to 9 to 10 years in this girl. We gave her everything we could. She gave back everything she could. And now we're letting her go without even a thoughtful, deep, sensible conversation. Is that us being stupid or her? And the answer is clearly us. So I think, you know, as organizations, what we need to spread to private equity is that there have to be more males that are listening. There have to be more males that are open to having a conversation. And we have to tell our young women, which they often don't do, that they should not just send in a resignation letter by email. They should walk in, articulate their problems, ask to be heard, and ask for a solution. So I think we're all on the right track. This is a great day. I've had a lot of fun, and I just want to wish WINPI a very, very happy birthday. Kudos to all of you, and many more good years ahead. Well done.
Thank you, Zia. Thank you so much. It is really heartening to hear from you that the change has started. Given your perspective, given the vantage point you have, I think it's a very welcome statement. We clearly have a lot of work ahead of us, but today has been fantastic in hearing from all the leaders that we had here, and then sort of brainstorming on everything that can be done and everything that is being done just to move this agenda forward. Thank you so very much. I want to make one more attempt at playing a testimonial video, and you know, Zia, this is like my personal thing. It's your message on the testimonial. So we've tried to, you know, strategic size of the video. Let's see if it works now.
It was very much needed for the investing community.
I think the bricklayer that has been formed is truly phenomenal.
Taking an organized step towards fostering women representation in the entrepreneurship and investing space in India.
Kudos to them for bringing this wonderful idea to life to empower women.
WinPE has fostered exchange of ideas and exposed us to best practices from our peers and from within the industry all over the world. This has helped us deepen the agenda pertaining to gender diversity within our firm and also helped us drive this agenda within our portfolio companies.
It has played a huge part in guiding me to restart Women in Management Club back at my campus.
Very proud to say that WinPE has not only brought about meaningful impact for women who are a part of this industry, but has also brought out impact for women who aspire to be a part of this industry.
Align the industry leaders, set up the platform well, enabled so many digital charchas, and kicked off mentoring. Really impressive momentum.
I wish you all the very best in your endeavor of bringing more women in the investment world.
I was part of the events of WinPE, and I must say that they have been curated with a lot of passion and hard working.
Your accomplishments in the last 1 year is simply outstanding, especially if we consider that this was an unusual year of pandemic and you were starting a brand new organization with a rather unusual agenda. What you have done last year has brought a very comprehensive approach in terms of embracing all your partners, getting their complete buy-in. You created an environment for sharing and learning. You created an environment for mentorship. So it's an extremely comprehensive approach that you have taken.
When we speak with recruitment firms in the last 1 year, diversity has been one of the key criterion, and I attribute this success to WinPE.
Despite COVID, really made people come together virtually, created events and a platform for sharing and really making a difference.
A very important initiative, and I think one that will go towards making a much better investing industry, private equity industry, which is truly representative of our society, is balanced, is diverse, and will lead to better results for the industry.
I've had the once-in-a-lifetime opportunity to interact with my role models.
Thank you for bringing together like-minded private equities, like-minded professionals, and starting the various initiatives that you have done, such as the mentorship program, to help young women professionals in our industry break the various visible and invisible ceilings that exist.
Being associated with WinPE has allowed me to really understand better the challenges that women face in the PE industry. It has also helped all of us at NIF steer the organization to become more friendly to bringing in women professionals into our team.
Have not only opened the doors into the industry, it helped demystify a lot of concepts and ideas around this sector.
It was amazing for me to learn so many successful women, and 20 plus global as well as domestic organizations are trying to do their small bit.
The ability to line up the key decision makers in the ecosystem to push for ambitious, clear goals and keeping the focus on the key goals and the actions required to achieve. Enabled the ecosystem to share best practices on how each member firm is pursuing their goals in a very productive, candid and honest fashion.
I can only say that this is one of the really genuinely strong initiatives where diversity has been taken up not only so seriously but also so tenaciously. Now everybody has heard of you and will almost be scared if you knock on their door to say that they have not been or they have been wanting in fulfilling their diversity goals. So congratulations and all the very best ahead.
We've lost Zia again, but Zia, thank you so much for that message. And I'm so glad we were able to make the technology work. But I guess that's what we've done throughout the last year in sort of reimagining everything that WinPE is doing and use technology to fit the new world. And, as we end this session today, I have to say, I don't think WinPE could have asked for a better way to mark its first anniversary than to have an evening of such power-packed conversations with some of the most influential leaders in the investing industry. I would like to thank each one of you for dialing in, for sending in your wishes to WinPE, and for being a part of our work. Thank you. I would also like to take the opportunity to thank the talented and bright young women who have stepped forward to be our ambassadors and who are leading many of our initiatives and engagements for their peers and colleagues. Thank you, ladies. A big virtual hug to the WinP team for working incredibly hard and with passion to make the WinP vision come true. Thank you, Trina. Thank you, Atulya. I hope you get some sleep tonight. And a special shout out to Nitya Balagopal and her team at Black Elephant Digital for being on our side since inception and in giving a face, a visual identity to all our ideas and thoughts. You have redefined partnership and raised the bar incredibly high. Thank you. Once again, a big thank you to all of you for your support to WinP and for joining us today. Have a great evening.
WinP's one-year journey has been through the COVID time, and we've achieved a lot. There is a lot to celebrate. Thank you for all the industry leaders who spent time today sharing their insights, all the partners who've supported us, and for you, audience, for spending your time and listening to us. Hope to see you in our next WinPE session. Happy birthday, WinPE.